Hello, I am Talibah Bayles, and I am truly excited to be joining the Worship Center again on such a powerful endeavor to equip you with smart money Saturday tools as it relates to individual tax preparation, tax strategy. So, if you can get so excited about what I'm going to talk about, here is the title. The title will give it away. Beyond the Refund. That's a clue. Beyond the Refund, how to use tax planning to save, invest, and achieve your financial goals. All right. So, specifically, my goal before you today is to ensure that you are equipped for this tax season. Now, I realize it's already April the 5th and you probably already filed your taxes, but if I were a betting woman, I could assume that someone has not filed their taxes yet. Either bucket you fall into, I want to assure you that we will accomplish the goal of equipping you today, right now, with the tax planning strategy that's going to ensure that not only you're ready now if you haven't filed, but you'll be ready for future tax seasons. There are a couple of specific strategies that I want to cover during our time today. And you are probably looking at the presentation slide, but just in case, let's make sure that you know what the expectation should be on what I'll be covering. So the strategies will be optimizing your tax withholding for better cash flow. All right, so you had a pre-assignment, and hopefully you've already done that pre-assignment because that can guarantee that when we are covering these strategies, you're going to already have wheels are spinning and be plugging in your own numbers really to ensure that what I am saying is most applicable to you. So we are going to dive into why your tax withholdings throughout the year are going to be key to your household cash flow. We're going to talk about leveraging your tax return for home ownership. And I want to amend that a little bit because really any loan process that you may be considering or you may be entering in soon. So that's home ownership or just any loan. We're going to talk about the importance of getting this tax filing thing right and how can you leverage that. Then, so here's like a hidden treasure that most people don't realize because we tend to think that tax season is after the fact, right? But you can also absolutely use your tax filing experience to help you set a household budget. So we're going to get into some budgeting tools with your tax return. And I am going to touch on some tax saving financial accounts that help you kind of set aside pre-tax money. We're going to talk about some 401ks, 529s, things of that nature. And of course, we're planning for future tax seasons. I've already promised you that by locking it in today, you are absolutely going to be prepared this tax season and for future tax seasons to go beyond that refund. And lastly, I'm going to reintroduce myself as your newly selected Alabama member to the Taxpayer Advocacy Panel. That is a federal advisory panel to the Internal Revenue Service, and I am just a part of that committee 2 months in, brand new. So I will talk to you about sort of this double bonus that you're getting in me serving as one of your speakers on behalf of my tax and accounting firm, and absolutely now as the state of Alabama's member for the Taxpayer Advocacy Panel. So I hope you guys can feel that energy as to how excited I am to go over these things. We're going to dive right into it. So I am going to start with some common tax deductions. You know, if you attended my session a couple of years ago, you know that I believe in edifying and giving you information so that you can be an informed taxpayer. And so I pull a lot of what we're preparing with actual questions that I've received over these 18 plus years of doing this. So let's talk about common deductions. Now, when we dive into that, though, let's give a little background. And that is standard deductions versus itemized deductions. That's how I will answer this common deductions. Talibah, what are the common deductions I can take? I want you to look at standard deductions as well as itemized deductions. And the answer to this is actually on your tax form, okay? You can see here on the presentation, I am showing you a picture of the Schedule A. And so if you do have write-offs, that's the most common term that everyone is familiar with, then the Schedule A may look familiar to you. Because that is the form that you use to do those write-offs. But what I want to do is give you the science behind, should you be keeping all these receipts in that shoebox or that however you're collecting them, or should you just take the standard deduction, okay? So you can see here that for this particular tax season, the numbers that we'll be going over are for this particular tax season. They do fluctuate each year. They're adjusted for inflation. So these numbers that you're looking at are for this tax year. So for this tax year, the standard deduction is based upon the fact that if you are filing as single or married filing separately, okay, that's your tax filing status. Single or married filing separately, it says that your standard deduction for this year is $14,600. Okay, now let's go deeper into what that means. What that means is if in the totaling of all of these categories that we're about to go over is higher than 14,600, then you are in the best position to itemize all of those write-offs. However, if the totality of the items that we're going to talk about in a few seconds is less than 14,600, then it is more beneficial for you to take that standard deduction. Okay? But I'm still going to tell you what those common deductions are, because just in case you were leaving money on the table and you weren't itemizing after you realize, hey, I should have been, I want you to say, thank you, Talibah, I'm going to amend that return so I can go back and itemize. All right. So the most common write-off that is applicable when we're talking about the Schedule A is for my homeowners or my property owners, okay? In the sense of having a mortgage outstanding on that property. So your mortgage interest deduction, all right? Said differently, it is a mortgage interest statement that you are getting annually. And it will have on that statement the total amount of interest you've paid on your mortgage. And it will also have your real estate taxes that you would have paid annually for that given year. Okay? Now, if you have numbers in those boxes, and I'm going to tell you, if you know that you have a high interest mortgage, then you definitely want to go find that statement if you have not been itemizing, because I have found that those of my clients who do have maybe an interest-only mortgage or a higher interest mortgage actually have a larger number that could help them get over that threshold, remember, that we got to get over for the standard deduction. So that's the mortgage interest. And you're looking for interest and real estate taxes. Okay, those are the two numbers you pull from there. The other item that can be included in the total, okay, on that Schedule A, is relevant if you have made any large purchases, and so you have paid sort of a kind of a bulk amount towards state or local taxes. See, that could be a vehicle, it could be a huge piece of equipment or something of that nature, and you paid it in full, and so you had a huge state tax amount that would be applicable to you. If that is applicable to you, then that's a number that we can add to that total. Remember, and I want you to keep that 14,600 as just an example only, because we're trying to get over that amount, okay? The next one, which I am quite sure that Bishop Van Moody wants to make sure that this is applicable to you all, and that is charitable contributions, tithing. If you are a tither, and I always add heavy tither in there because remember, we're trying to get over a total number to make it worth it, right? So if you are contributing cash, if you are contributing household goods, clothing, you're donating those things to a 501c3, then I want you to listen up and make sure that you're keeping track of those contributions, because you can see here that there's an amount that's allowable, that's a part of that total that we want to be having into our calculations there on that Schedule A. All right. So those are sort of those main categories that are on the Schedule A. I do want to talk about medical expenses though, before I hop to what's not on the Schedule A, because medical expenses is a little bit more work to claim. And so I usually tell my clients, that medical expenses kind of come on the table if unfortunately, you've had extensive doctor's visits, or something going on in which that you've spent a lot of money on co-pays, on prescriptions, on doctor's visits, because the medical and dental category only comes in when you have accomplished over 7.5% of your AGI. Okay, and all of this is on the Schedule A itself, and it'll show you. And so once you've reached that threshold, then you can put that number now comes into play in that total that we're talking about. Again, as an example, the $14,600. All right. Now let's talk about some of the common tax deductions that are not on the Schedule A. So these mean you don't have to itemize at all. And I want to go over them because they're, quite applicable to a lot of us that may be joining in today. We call these the above the line deductions, meaning they come off, they have their own line on your form. And I, have to stop myself on getting too nerdy nerd because I almost went there and I got to pop myself out to make sure that I don't zone in on something completely irrelevant to you. So let's go straight to the goods, all right? Student loan interest deduction, right? I'm sure some ears perked up for those of us who have student loans. If you had student loan payments, okay, we know that those of us who got in before all of this hoopla with the forgiveness program being kind of shut down, that's applicable to you as well, even if you may not have paid actual payments. I have seen where student loan interest was reported even in those instances where you may have had a loan forgiven. So make sure you're on the lookout from your student loan service provider for that statement. And I want you to take a look and see what that number is, because you are able to deduct up to $2,500 when it comes to your student loan interest. And it is based upon AGI, okay, income phase outs. However, student loan interest is what I want you to remember, and I want you to take a look at that statement, okay? Now, let's talk about why I really wanted you to do that pre-assignment. And if you haven't done the pre-assignment, don't worry, because you can scramble and do it right now. No, I'm just joking. You can do it after this presentation and absolutely let us know now kind of how this all made sense to you when you plugged it in. Because see, now I'm transitioning over into how the withholdings that you are setting up with the IRS directly impact your cash flow. So you can see here on this next slide where I have optimizing your tax withholdings for better cash flow, that I have two scenarios, and the highlights give it away. So the first part is, are you always loaning the IRS money? I'm going to say that again. Are you always loaning the IRS money? And you can see here that really what I am putting a spin on or saying differently is, are you always getting a huge refund? Okay. So if you are always getting a huge refund, or just let's just say a refund at all, I want you to ensure that you are doing that withholdings exercise. But to go back and coin it in the way that I originally framed to get your attention is that if you're always getting a sizable refund back, I want you to consider that actually you're loaning the federal government. The federal government is able to declare interest from this money sitting in a huge bank account, and making money throughout the year on that refund because you're overpaying. Okay? You're overpaying on the withholdings. So when you do that exercise, or if you've already done that exercise, you may already be on to where I'm going with this. So when you go and you do the withholdings exercise, you're going to gather some documents, and it is on irs.gov. You'll see where the assignment sheet links you there. You're going to answer some questions. And what I like about this really cool tool that the IRS has is it helps you determine, hey, do you want to have a refund, or do you want more of that money throughout the year? So that's where it goes to optimizing your own cash flow. You may want more of your money throughout the year to help set a bigger budget for groceries, for gas, for other expenses that you know that your household needs and that may need tomorrow, versus you waiting until next January or whenever you file to get that money. So that's why I'm being fancy about saying, are you always loaning the federal government money? Or it could be that you're always owing the federal government. But in either scenario, I want you again to make sure that you're doing that withholdings exercise so that you can see what bucket you're in and adjust accordingly based upon where you need your household's cash flow to be. Because I can't say how many times, and at this point it's too late, right? Because I'm doing your taxes. The year's already gone. But I can't tell you how many times I've met with a taxpayer, and certainly my married couples, where we're realizing, hey, you're not having enough taxes taken out of your check, and that's why you owe. Or I didn't know that my W-4 was what needed to be changed. All right. So that's where this exercise is going to get you. And so the next couple of slides here is directly linking the exercise to the W-4. But to make sure that I stay on task, I'll just touch a little bit on the W-4. If you are having that, you're in either of these buckets, right? If you're giving the federal government a loan, or if you're always owing, the W-4, especially if you're on payroll, okay, is that form that you might need to revisit to make the necessary adjustments that the calculator will tell you. All right. If you are not on payroll, okay, and you are a 1099 contractor, then you definitely got to spend some time with that withholdings calculator, because none of the money that you're earning is taxed. And so it could be that you're in that bucket of, I'm always owing the IRS. Help me, Talibah. Why is that? All right. So that is how can you make sure that withholding throughout the year is where you need it to be for your current situation in your household. So as promised, I do want to make sure that I have enough time to talk to you about why it's important to understand how you can leverage your tax return for purchasing a home or any other loan, okay? And if you are in the market for that and you're already talking to a realtor or you're talking to a lender, then they should also be informing you of how can you ensure that when you file your taxes, you're putting on that tax return what underwriters need to see so that you're qualifying for a home. And so you can see here that your tax return comes on directly onto the table. And how many years of tax returns do underwriters ask for? Typically, it's 2 to 3 years. Okay, typically it's 2 to 3 years of tax returns that lenders want to take a look at what was this income like. What are, especially for my business owners, after you brought in the income and it was spent, what's left? Because in essence, your tax return is telling said lender, this is what we're bringing in, this is what is going out, And they need to know is, are you going to have enough left to pay me back? In essence, that is what your tax return is telling the lender. And so, it's a whole nother probably conference, and hopefully TWCC will have me back so we can dive deeper into that, particularly with my business owners, because it is a whole understanding that you need to have with these negative tax returns and negative Schedule Cs that I know exist in our audience, of too many write-offs. All right. So the other things that your tax return may tell you is, again, your debt to income ratio, which if you're in the market for a loan, again, coin under this, hey, can you pay this loan back question. Those are the things that are being considered. So you can also, when you do that withholding exercise, you can also use your tax return to actually set a budget. Now, how can you do that? Okay, how can you do that? Well, first, if you were in that bucket, remember, of always getting a large refund, so that loan, so the IRS pays you that loan that you gave it throughout the year, and you're getting a refund, you'll see here that I just made some suggestions on what you can do with that refund. And specifically, you can have where, let's say, 40% of that refund goes to savings, 30% goes to debt, 10% goes to investing. These are some conversations that I invite you to have, if it's just you, with yourself, or with your family members, all of your stakeholders involved, to set a budget and to properly use your refund. Of course, you want to make sure that you're not leaving any money on the table when it does come to some of the deductions that we talked about. So again, let's make sure that we are going ahead and saving those receipts and ensuring that, okay, is it better for me to do the itemizing, or should I just take the standard deduction? So again, I want to make sure that we're having enough time. So I have put into the PowerPoint slide here a couple of tax savings financial accounts that you may already have. And that's 401ks. I'm so used to saying 501c3, 401ks. There's also the 529 accounts, particularly for those of us with children who are pre-college age. I want you to take a look at this. I'm going to give you a little homework to make sure I have some time to go over everything, and take a look at that financial accounts grid that I put in the presentation that gives you some suggestions on some financial accounts that could help you have some pre-tax scenarios where you're able to direct some of that money into something that you can leverage later. So we already talked about the homework. Again, if you haven't done it, I strongly recommend that you do the withholdings exercise, because here are some questions that I want you to be thinking about. How does your current withholdings compare to the estimator's recommendation? All right. How does your current withholding compare to the estimator's estimation for you? Were you way off? All right. Now, how does that have an impact on your take-home pay? If you're having not enough taken out, then of course that's like, well, do I keep it that way and just pay the tax bill in January? So those are some really good questions to try to plan for. Are you comfortable with the balance that's between your take-home pay and your potential tax savings? Okay, these are all some sort of internal thoughts that you could be having after you've done that exercise. And of course, how can you use those things for future planning? And that goes towards, if you are having a refund, having some buckets set aside that you want to use that refund for, or making the decision to have that money throughout the year so that you can put that in a live budget like groceries or like gas. And so I already kind of gave you that huge announcement that the bonus of us working together and sharing space in this conversation is that I am the newly appointed Alabama member for the Taxpayer Advocacy Panel. And so I do want to share with you what that means. What that means is hopefully I'll see more of you in and hear from more of you, because the Taxpayer Advocacy Panel is responsible for working directly with the IRS on systematic problems. So an example of a systematic problem is that I know that if you have to call the IRS, who knows how long you're going to be on hold. Speak up about that. I'm providing you with improveirs.gov, which is the website in which we take submissions of systematic problems that you have encountered as a taxpayer, whether it be unclear letters that you've got in the mail. You got this letter, you have no idea what it's talking about because it's not clear. And how can you transmit your documents to the IRS? There are some systematic things that as your Alabama member, I can definitely make sure that we are getting into our meetings that we have monthly and ensuring that we are advocating for those systematic problems. So also you'll see, I'm going to wrap it up. I know that I covered a whole bunch of information, but again, this is a series. You got the homework, you got the slides, spend time with it, because I'm giving you some more goodies. So you'll see here in the presentation, because you made it all the way to the end, is that if you need a tax checklist, we've put a lot of thought into this one. You'll have that link in which you will get that checklist. And this is going to be helpful throughout the year. In fact, if you use it throughout the year, then you will be the best tax client in the world. But most importantly, you'll be the best steward really of your own numbers throughout the year. You won't be blindsided by your tax experience if you're collecting these things throughout the year and knowing what your totals are. And so we're giving you that tax checklist so that you know what to start collecting, because a lot of times that's the question we get, is that you don't know what all you should be collecting. And so the link in the presentation for the tax checklist you'll find helpful. And then finally, the other and last thing that I want to give you is the Bankably Power Partner Playbook. Bankably is a web platform that I am developing. She's actually my baby. She's live right now. And Bankably is built for business owners primarily, in the sense that you can have your taxes, your accounting. I have classes on there that you can take, and we match you with lenders. And so Bankably is my baby that I'm rolling out very strongly this year in 2025. And so if you are interested in learning more about Bankably, all you got to do is click that link that you'll be given for the Power Partner Playbook. You'll see all the tools that you would have available to you on Bankably by becoming a user. And so that is certainly my parting gift. And thanking you for your time. I hope that you have found, again, with the combination of that pre-exercise and the content that we've been over, I hope that it has done the right job of motivating you, because I know I could spend hours on this, but motivating you to lock it in and use everything that you have been provided on a one-on-one time with yourself, or a family time, and start accomplishing that theme that we've set out for you in having Smart Money Saturdays. Thank you again, TWCC, for having me.
All right, Talibah, your session was incredible. Gosh, I got a lot of things that I want to talk to you about in this Q&A. I've taken copious notes, and so I'm sitting here with my laptop. First of all, let me just say it publicly. I really appreciate you and what you do. And I appreciate you and what you do for a lot of different reasons. Not only are you an expert in the field, but I'm really grateful that you are a sister of color, because often I found that our communities of color don't have access sometimes to the right leaders in this space, so that we can take advantage of the knowledge and the strategies to keep more money in our pocket. And, I probably sound like a broken record to our audience, but I say this all the time. The name of the game is not how much money you make. People get enamored and say, oh, I make this amount of money, or, they think that the end goal is to get to a certain salary. And what they don't factor in is how much money they got to pay in taxes.
Exactly.
And so the name of the game is not how much money you make. The name of the game is how much money you keep.
Exactly.
And this is why, this whole Smart Money Saturday and really understanding taxes is so critical. Because often we don't know what we don't know. Just get my taxes done and Lord, hope I get a refund. We pray for a refund without being proactive. And I think the first step is to understand the difference between a tax preparer and a tax strategist. Now, while your business does taxes for individuals and companies, you are not a tax preparer, you are a tax strategist. And y'all, that's so important. You need a tax strategist. It's the difference between finding out on the backside, this is either what you owe or this is, all you're going to get in a refund versus having a tax strategist that helps you understand, okay, here are the things we need to do so we can maximize the money staying in your pocket. And so I want to thank you, number one, for being a tax strategist. That's why I always want you to be a part of anything that we're doing. Because I don't know many people of color that are in this space doing it at the level that you're doing it. But I know you see lots of clients. And so am I off here? Or, why do you think the difference between tax strategy, tax prep, why is that even important?
It's up to you as to when you're going to get off the sideline and take action on this. And so the reason why it's important, particularly now, is instead of the refund, what about having more of your money throughout the year and now, tomorrow, whenever you get paid Friday, so that you could cover gas?
Yes.
So that you could cover groceries. And that's the difference between a tax preparer and a tax strategist.
Yes.
Much of my presentation this go around is focusing on the IRS tool of the withholding calculator.
Yes, that's I'm getting to my notes on that. Yeah, no, that's huge. Go ahead.
And the withholding calculator is on irs.gov. It is a free tool. It tells you the documents that the IRS wants you to have, with you to answer the questions completely and accurately. And with that tool, the IRS will tell you if you're having enough taxes taken out of your check throughout the year. And what do I mean by enough? Enough to prevent you from owing a bill. But there are some taxpayers who use that to say, I don't need a refund. I want to get as close as possible to having most of my money right now and not owe. And you can use that calculator for that.
Absolutely, because then what you're doing is you're keeping more money in your pocket that you can use for a number of different things. I love how you talked about, some of that money could be, it number one, impacts your regular budget, your monthly budget, right? Because the name of the game for a lot of people is margin.
Yes.
Do I have margin? Do I have money left over after all of my bills and things of that nature? Because it's what you do with the margin that changes the game. You could invest that. You could, if you're a business owner, that's more money that you can put into the business that generates higher returns.
Absolutely.
If you want to retire faster, you can take some of that margin, put more into your retirement vehicles. Like all of that stuff matters.
Absolutely.
And if it's just $5, well, guess what? $5 every pay period.
Oh yeah.
It all adds up. And I think that's the piece.
Budget.
Yes. And I think that's the piece that people miss.
Yes, it is.
They don't understand how these little tweaks can add up to really big impacts in a variety of ways for their own personal finances if they would just follow it. But one of the things that I love that you dealt with in your presentation that I also think is critical in this is making sure that you are exploiting every deduction possible. And I have found that a lot of individuals they are not doing it. Why do you think that that's extremely critical? In your own business, I know you see a lot of people that leave a lot of money on the table.
Yes. Whew. Well, that's I'm gonna try not to get on my podium on that one.
Get on it, sister. Get on it.
Because I think it goes back to the culture of the refund in the first place. Where are we going to have our taxes prepared?
Yeah.
And when I got started way back when, I did work for, as I like to say, a big box brand tax company. And there isn't a whole ton of training that's provided to those individuals that are in those stores. Okay. All that is we need a body in this desk so that when people come in this door, we're getting their taxes and we're getting their tax preparation fee.
Wow.
It's not about educating that person that has just come in the door. It's about getting the product sold. And so I believe that a culture has been developed from that philosophy, in the sense of, come on in, sit down, give me your W-2s. You have kids, oh, you're head of household, earned income credit, you
Yeah.
get a $7,000 refund. I'm not edifying you on what that even means.
Right.
So if that's all I've talked to you about,
That's all you know.
you're going to walk out of that store saying, dang, I'm glad I got 3 kids and I earned this and I can get a $7,000 refund every tax season. Then you go tell the next person. And so now we have a whole community
Yep.
that has been incentivized to just take the earned income credit and have the largest refund possible. Now, don't get me wrong.
Yep.
I'm not sitting up here acting like a refund isn't a good thing.
Right.
What I want our community to embrace is ask whoever is preparing your taxes to
Yep.
explain this to you.
Yeah. Yeah.
Because in the presentation, I talk about the difference between itemizing and taking the standard deduction. And
Yep.
we go over the different categories of things that, said differently, are write-offs.
Yep.
Charitable contributions. If
Yep.
you're a heavy tither, it's quite possible that
Praise
you
the
should
Lord.
be right. It's quite possible that you should be itemizing.
Well, and that's the thing that I say. Obviously, as a pastor,
Mhm.
all these stereotypes. People think, well, the pastor just going to talk to you about tithing, but also as with my business hat on,
Mhm.
I recognize that the more money you make,
Mhm.
the name of the game is how many deductions do you have?
That's right.
Okay,
Yes.
all right, go ahead.
Yes.
For the
thank
regular
you.
person, I didn't want them to miss that.
Thank you, because I definitely was going to zoom right past that.
Yeah.
And so I think the biggest piece of this discussion is to go ahead and get that shoebox out and just start collecting stuff.
Oh, yeah.
Use the presentation in the categories of things that could determine whether or not you take the standard deduction and the itemized deduction, and then you go into wherever that experience is and you decide, hey, okay, this added up. It's not higher than the standard deduction, so I'll take the standard deduction and that number will reduce my taxable income. But if it's that, wait, I have all these receipts and I don't care, $1 over, that dollar reduces your taxable income. So I want to incentivize our audience to take ownership of your numbers. That withholding calculator makes you take ownership of
Yeah.
your numbers. It allows you the opportunity to sit down with yourself or sit down with your spouse and your family to take ownership of your numbers. Because when we don't have those things in focus, you're missing an opportunity.
Yeah.
Like when you're not looking at it, when
Yep.
you're not looking at your numbers, you're just going on and on and on. You're
Yep.
going into the job or going into the office. And, and I think we all feel like at times it's like, man, I'm putting a lot of work in, but my bank account is not looking like I feel every day when I come home.
Yep.
Take ownership of those numbers. What can you do about it?
Yep. We're in an interesting environment when it comes to real estate. We know that there is huge demand, low supply.
Mm-hmm.
And at the same time, which we know that's driving real estate prices up,
Mm-hmm.
but at the same time, the younger generation, and I don't want to start labeling them because I'm getting older and I start labeling them incorrectly. I remember when you used to call them Gen X's and now it's millennial. It's all of the new terms. And I think there's a newer term that I'm still not I'm not quite clear on. But here's the point. The data shows that more and more people are opting to rent.
Mm-hmm.
And you see it, in various cities. The largest aspect of development in cities are rental properties.
Mm-hmm.
Now, a new emerging thing is homes for rent, where developers are going in and building homes, not to sell them, but to rent them. Now, there are lots of reasons, and I've from all kinds of articles that I read, and I'm a big NPR person. I mean, I've listened to all of the reasoning from the leading experts around why there's uncertainty with purchasing, and I get all of that. But here's something that I've been chewing on that I think people are missing, particularly in our community. Some people say, well, it's easier for me to rent because I don't have to have the headaches. But what's happening now is rents are pretty much as expensive or more than mortgages. So yes, you may say, well, I can go rent and I don't have to worry about the headache of if a water pipe bursts and I got to get that fixed and all of that. But what people are not talking about is you're paying in a high rent scenario the same or more than you would pay for a mortgage, and you lose the tax benefit.
Oh, yeah.
Meaning that you cannot write off, now correct me if I'm wrong, you can't write off a rent payment.
No.
But you can write off mortgage interest.
You can. And without going, because I want to stay on that.
Okay.
Without going down another path, I want to clarify, if you have a home office. Come on. Then then a portion of rent comes in, but that's a whole conversation.
Right.
That's that tech strategist coming out. It's like there is absolutely incentive as a business owner having a home office.
Yeah.
Of those types of things.
And if you own a home and have a home office, you're getting the mortgage interest.
Right.
And you're getting the home office deduction.
Right.
That's substantial.
It absolutely is.
Yeah.
Because and we talk about that in the presentation for those of us who have home offices, and this is tied to business. I want to clarify that.
Yes.
Because there was a change, I think tax year 2018, where if you're a W-2 employee, you can no longer do the home office. This is just for business owners. But to go to the value of strategy, when you have determined that I am using X square footage of my residence, and now it does include renting spaces as well. X square footage of my living space belongs to my business. If my home is 1,000 square foot, my office is 100, 10% then is dedicated to business. That's 10% of everything, y'all. 10% of total utilities for the year, 10% of total real estate taxes, total more, so it's those types of things that if you're not having a conversation with someone,
a tax strategist
who knows strategy.
Yes.
That's where we get into the scenario that you shared with us on the $5,000 versus $30,000.
Yeah, you're leaving money on the table. All right, so we're almost running out of time. There's so much more that I want to pick your brain on. I mean, you talked about retirement contributions. You talked about HSA contributions. What do you think is probably one of the greatest tax strategies that we don't take advantage of? I mean, in your practice with businesses and or individuals, I want to throw this out. Like, what do you think is a tax strategy superpower that we don't utilize enough?
Well, if I want to be in concert with the presentation, I am going to say that withholding calculator. I really want to make sure, I even did a homework assignment, Bishop.
Okay.
where the audience is invited to do that withholding calculator so that you can make the decision on how much of your money that you're working every day for you're keeping. So I do want to start with that. The first thing that came to my mind, though, was a 529 account for those of us with
529,
kids. 529.
Yeah.
For those of us with kids.
Yeah.
That are, whether they're young or getting to be in high school, creating an opportunity where you're setting aside money that can be used on your Alabama state tax return because you're creating a college fund for your children to be able to use in exchange for tuition. So it's really, again, I want to go back to, because I know we always run out of time because we could go on forever and ever. I want to go back to where I started, which is it doesn't matter 1 comma, 2 commas, or 3 commas in your paycheck, in your bank account. I want you to take ownership of the things that you've learned with Smart Money Saturdays. I know it's going to be a series. Hopefully y'all will have me back.
Oh, we will, sister.
And this is, it's a challenge. It's a call to action.
Absolutely.
And so that's why, I definitely took time away from the computer to come and participate in this. Again, applauding you, Bishop, for these types of community investments.
Amen.
In talking about these types of things in a space of trust and in a space where
Yep.
hey, what we're telling you, first of all, is from the heart.
Yep.
We have your best interest
Yep.
in mind. It is not jaded in any way other than your edification.
That's it. That's it.
So this is a call to action, this first Smart Money Saturdays, to take these tools that all of us have given
Yep.
to you.
Yep.
And for me, do that homework assignment.
Yes.
And join us for the future Smart Money Saturdays. And let's not be distracted with what we may see on the news every day. And let's focus on what we can change, which is these things that we're talking about.